Hi there, Miranda Alt here with Keller Williams Success Real Estate and the Miranda Alt team with your Monday market update for Monday, January 9th, 2023. Hope you're having a great start to your week. The sun is shining here in the Midwest, so we're happy about that. Haven't seen the sun in quite a few days, so that's a good thing. A quick look at your McHenry County numbers for the last 7 days. We had 86 new listings, only 86. Anytime we're under 100, that's low. 86 new listings, and this week only 65 going under contract. That is a huge contrast to what we've seen for the last 2 years. Most weeks we have had more homes going under contract than we've had listed new. So having about 20 homes in the positive, meaning more listed, is a huge swing for us. We had 33 closed sales. That is way low, only 33 in the entire county. We had 51 price changes. That's kind of a lot for those numbers too. And we only have 25 on the private network. So what are we seeing? Still super low inventory. That's holding steady. Interest rates are still higher than they've been in a while. So people are hesitant to pull the trigger on a new home. We've also got, it's winter. It's slow. I mean, it's the first week of January. This is always a slow time. So looking a little bit at our headlines right now, Yahoo Finance this morning had an article out with the housing market fizzled out. It says 2023 is off to the worst start in decades. But here's why analysts are dreaming of a mild spring. So here's what's going on. We've still got interest rates. I believe Fannie Mae reported today that the average 30-year fixed rate is at 6.48%, up from last week when the average rate was 6.42. So they raised a little bit the last 7 days. And that's according to Freddie Mac. This time last year, the average rate was only 3.22%. So that is significantly higher, almost, so it's double. So the interest rates are double what they were this time last year. So to say that we're off to a really slow start, yes, that's true. But it's also because interest rates are double what they were this time last year. But we're dreaming of a mild spring. Why are they saying that? Well, because what we're anticipating, according to a lot of economists, according to Redfin and some other mortgage specialists, we're anticipating that the rates will come down in the spring, and we're anticipating that it's going to stabilize. Okay, so although rates are more than double than they were a year ago, rates will likely stabilize below 6% in 2023 as inflation will continue to slow down in the following months. So what we're anticipating is going to happen is that we're going to have lower rates in the second half of the year, and we're going to have a huge influx of buyers at that point. So while 2023 is not going to be as good as 2022, and 2022 was not as good as 2021, those years were record-breaking years. So 2023 is going to be slower, but it's not going to be a bad real estate year. So who are the buyers that are out there right now? Because we are still seeing some activity. We are still having homes being listed. We are still seeing buyers out looking for homes. Who are those people? So if you're thinking about buying or selling, what are some issues? Well, number one, prices are a little bit lower right now than they were this past spring, and lower than they're likely to be this upcoming spring. A common conversation that I'm having with people right now is, hey, if I'm planning on 2023, do you think I'm better off waiting, or do you think that I'm better off listing now? And let me tell you kind of the pros and cons about doing it now versus doing it later. If you are moving out of state, and you don't care about how long you're going to stay here, and you already have your next home purchased and you're already done with all of that, then I would probably wait till the spring. I think you're going to probably see prices tick up in the spring. So if you can not be a buyer and you can afford to wait, then you might want to wait. Now, keeping that in mind, you're also going to continue to pay taxes for the next 6 months. If you're going to wait 6 months, you're going to pay taxes for all that time. You're going to pay all of the expenses. So is it worth it? How much more you're going to get to wait for the spring versus just selling now? If you can just sell now and go to your next house, you're going to have expenses with owning 2 homes. So it depends on what your motivation is. I just met with sellers on Friday, and they are wanting to move to Texas. They don't really want to stick around and wait for this weather. They don't want to deal with winter. They'd like to just get out of here. So they don't really care. They're going to just go. They're going to just list their house now. fine. Right? It all comes down to what's your motivation? What's your overall goal? Is getting where you're going more important than getting maybe an extra $10,000? It might not even be an extra $10,000. And even if it is, you're going to pay taxes for the next 6 months, which is going to be at least $6,000 if you live here in Montgomery County. And then all of your utilities and all that stuff. So I don't know that it's going to make a whole lot of difference. Okay. Then the other things to think about, there are buyers out there right now. Here are the buyers that we're seeing out there right now. According to Redfin, 2 categories of buyers are starting their search right now. First timers hoping prices and competition are more manageable than they have been over the last few years, and returning buyers who took a break after losing out on multiple homes during the pandemic bidding war frenzy. So we do have buyers out there that are enjoying the market being less competitive. Homes are a little bit so there's not as much to choose from, but sellers might be a little bit more flexible on their price, so they might be able to get a better deal on a home. Prices are still up from last year. They're still up about 9% year over year. They're still up about 9%. From where they were last year. So that's good. So you're still going to get a good price on your home if you're selling. Most sellers still have a lot of equity in their home. So we're seeing buyers who are getting into the market who have more equity in their home than they ever have had, and maybe they didn't want to sell over the last couple of years because they didn't have a place to go. You remember a couple of years ago, one of the things I was telling you was that sellers were hesitant to put their house on the market because they were afraid they weren't going to be able to find something else to go to. So maybe some of those sellers who now they've had another child, maybe they've gotten a little bit older and they've now decided that they don't want to have stairs. Maybe now they've decided they need an extra bedroom. So people are moving because they maybe were waiting when the market was so incredibly competitive, so incredibly inflated. And now they're like, okay, it's safe to get in the water again. Remember we talked about that a couple times. Like over the last spring, I said, every time a house was listed, it was like throwing chum in shark-infested waters. And every time a house would hit the market, it was a feeding frenzy. It was insane. And there were a lot of people who are involved in that market, and they don't want to be in that kind of market. And we're not having that right now. So right now, we have very, very low inventory still. So prices are remaining strong. They're not inflated, but they're strong. We are seeing a less competitive buyer's market. So it's not as crazy. If you're a buyer, you're not going to have 20 other offers that you're up against. You might have 1 or 2. There still are some multiple offer situations. So I don't want to say there's none, because there are still some, because we have such low inventory, but they're less aggressive than they were before. Some other things to keep in mind: should I wait till the spring or should I buy now? Again, if you're a seller, there's less competition right now. So if your home maybe isn't super duper perfect, there's not a whole lot for people to choose from. So if you put your house on the market and maybe it has a project or 2, it's not the end of the world. There's not going to be, your neighbor's not going to list their house tomorrow and have competition right there. So there are benefits to being involved in this market versus what we anticipate is going to happen this spring. We do anticipate that this spring mortgage rates are going to come down, and we're going to have more buyers enter the market again. We're going to have first-time home buyers, renters who are sick of paying these really high rents. I've been talking to a lot of my investor clients, and they know that rents went up 8% last year. And so they know that all of their tenants whose leases are coming up due, they're going to be raising those rents 8%, potentially more. Their costs have gone up. Inflation has had an effect there as well. So we know that there are going to be renters, when their lease comes due to renew in April or May, they are not going to be wanting to re-sign that lease because it's going to be too expensive. They're better off buying. So we've got a few of those different features that are going into this headline this morning. The housing market is not going to fizzle out in 2023. I think it's going to have a real slow start. We're off to a real slow start. First quarter, second quarter, they're going to be slow. We might even be slow into April and May. And that may be how it is until those interest rates start to tick down. April and May are going to be more busy than January and February every single year. March, April, May, we're going to start to pick up. We're going to have more people wanting to buy and sell. So it's not like no one's going to move this year. That's not going to happen. People are going to continue to get job transfers here. They're going to continue to get job transfers out of state. People are going to continue to have babies. People are going to continue to die. Those are the things that affect people moving, and those things are going to continue to happen every single month of the year. But we will see more activity happen in March, April, and May, but it might not be as much as we did last year. In fact, it's probably not. But then once those interest rates start to come down in potentially May and June, according to economists who know way more about this than I do, if those interest rates do come below 5% in June, it's going to get nuts. It's going to get nuts again real fast. So that's a quick look at what is happening in the McHenry County housing market and nationwide. Oh, one more thing. We did see that the real estate giants point to the most drastic declines in pandemic home buying hotspots of Las Vegas, Phoenix, and Austin, which saw pending sales drop more than 50%. So some of these national headlines that you're seeing, you have to take in mind that everything is very, very hyper local. So if you see a headline that says that prices are going to drop 20%, well, keep in mind where they might be talking about. If they're talking about Arizona, California, those areas that really spiked, yeah, that might be true. It's not going to be true here in McHenry County. We didn't see a spike quite that high that they did, and we're not going to see the prices plummet like other places are going to as well. So I'm Miranda Alt with Keller Williams Success Real Estate and the Miranda Alt team. Thank you so much for watching. Happy Monday. Have a great day. I'll see you next week. Bye.